Okay, but how about the economy? Okay, UOB predicts negative growth for almost every country, as you can see here, for 2020, as we can imagine, right? Because due to the lockdown. But IMF predicts a strong rebound next year in 2021. So question is, should we wait until things are better and when prices are higher before we invest? Or should we take advantage of the soft market now and capitalize on the superb developer discounts to ride on the 3 to 9% growth? You can see here 3 to 9% growth next year, Singapore being 3%, and most of the neighboring countries are expecting higher growth. Okay, here you can see again UOB predicting a U-shaped recovery for Singapore, assuming a containment of the virus by Q4 this year, and then we have the economic recovery thereafter. Okay, now if you look at China appears to have bounced back after their lockdown was lifted. In fact, if you look at the property sales in 30 major cities, it didn't only double, but it tripled in numbers. And again, in China, house prices rose by 0.1% in March, and again, it rose by 0.5% in April. In fact, I think the pent-up demand is very real. I believe everyone wants to travel, they want to eat out, okay, we want to shop, invest in property, and etc. And the first day that Hermes reopened their store in China, it recorded a $2.7 million sales as the wealthy splurged in so-called revenge buying after being constricted at home for so long. And if you look at Wuhan is the epicenter of the coronavirus. They contained the situation within 5 months. So question is, can we do it as well? Maybe by July, if it's 5 months. Okay, so of course it very much depends. And our question would be, what if tomorrow a vaccine is found and everything goes back to normal? In fact, just last week it was reported that the US has a very promising vaccine that they are testing. And on the same day, it was reported that China is also making good progress in finding a drug that could stop COVID-19. And today's Straits Times, another article reported that Thailand is also testing their vaccine. So there may still be chance for an extended V-shaped recovery, if not a U-shaped recovery. So the million-dollar question everyone is asking is, what will property prices be like with COVID-19? Okay, so I can only say, let me look into my crystal ball, because actually nobody knows for sure. Okay, but there are many telltale signs. Okay, there are signs that property prices have not crashed like the stock market, and the pandemic situation is improving, with everyone now racing to find a vaccine. And prices for sure will face an upward pressure with rising construction costs due to the lockdown and the additional safety measures that construction companies now have to put in place. Now let me next share with you how it is not difficult to make money in real estate, just with the right principles. Firstly, buy at the right time. Okay, like now where there are some good offers available. Buy when the price is affordable and when you are financially able. Okay, my tip is don't wait, because when you wait, it gets harder and more expensive to obtain a loan the older we grow. Okay, and some of the clients are envious of my situation, owning multiple properties, and they regret not doing more while they were younger. Okay, what's next you can do is to keep the properties for rental income and continue accumulating more properties, okay, so that you can have more monthly passive income than your desired lifestyle's expenses. Okay, then you become financially free. Lastly, if you wish or need to, you can sell the property at the right time to complete the cycle, although this is optional. In fact, you could leave your properties to your children as a legacy. I'm sure they will appreciate you very much. If you sell, you need to find another good investment opportunity that can give you the same annual returns. Okay, otherwise it doesn't make sense. So in short, buy low, sell high, as property generally appreciates over time, so we don't have to time the market. Okay, sometimes if we keep waiting for the prices to drop further, we may miss the opportunity. So here's a quick example, okay, of a development we have initially started off with an 8% VVIP discount. Then the price went up, meaning the discount came down slightly. And now with COVID-19, we have a special 20% circuit breaker discount. Okay, so if it were you, would you go in? Okay, because if you look at it, you have a 14% buffer safety net below the other, this buffer compared to other buyers who bought before you, if they were enjoying only 6% discount. Okay, but of course, some clients will say they want to wait. They want to wait for more discount. Okay, so is it possible? Because we know generally that developers have a 15% profit margin. So the developer is now giving a special 20% promo discount for this limited period of time. And we know that in future, they will increase the price of other higher floor units in order to cover back, okay, the so-called losses when they're offering this discount. Okay, so the question is, if you were to wait further and the prices revert back to just a 6% discount, you have just lost or missed out on a 14% paper profit opportunity. Okay, and of course you can still make money, but you have to wait for the price to go up further. Okay, so this is an illustration on how you can make money during this situation. Okay, so it is commonly said that in every crisis, okay, there is opportunity. As shown in the Chinese characters here, 危机, so you could actually turn crisis into opportunity. So how? Firstly, by leveraging on the favorable exchange rate now for the countries shown here, the UK, Australia, Thailand, and Malaysia. And we find that property is generally a good long-term investment that increases in time due to inflation and the growing standard of living. So as I mentioned earlier on, we don't really need to time the market. And we find that from research, the economies around the world are projected to rebound and enjoy strong growth in 2021. So let's not wait until 2021 before we decide to invest in property. Okay, property is more stable than risky stocks, as we've seen also, and hence is widely considered a safe haven, preferred by the wealthy to preserve and grow their wealth. So I think it's very timely now to capitalize on the attractive discounts and perks offered by the developers during this window opportunity. For example, we have developers offering 11% discount, 20% discount, free furniture, free legal fees, etc. So do check with your Huttons agent who invited you to this webinar for more information. Now, in fact, many of my clients have been predicting a recession that has been long overdue by 10 years. Okay, so the good news now so-called is that recession is now here. Okay, and there are many good offers available. Okay, so do not be stuck in analysis paralysis. Okay, not taking advantage of the good offers. So question is, will you be the Mr. Tan Ku Ku or the Mr. Tan Wee Kiang that we spoke about earlier at this webinar? Okay, with that, it brings me to the end of my sharing. Let's recap the 8 key concepts that I covered today. Firstly, why buy real estate? Secondly, why leverage? Thirdly, why passive income is actually more important for financial freedom than capital appreciation. What are some of the legal ABSD workarounds? Where you can invest and find good buys, how to mitigate the risk of property investment, how you can own multiple properties from $50,000, $100,000 or $200,000, and when is the right time to grow your property portfolio. Okay, I believe you will have many takeaways and learning points from my experience in growing my property portfolio. And with that, thank you for your attention. I shall now move on to answering your questions.
Okay, awesome. Thank you, Tony, for your insightful presentation. I'm sure many of us are quick to feel the rhythm of the overseas market and could also be thinking of diversifying your portfolio instead.